On today's daily analytical report, we will, as always, analyze the market from the technical and from the fundamental point of view. Maybe let me switch to the chart straight away, and I will be able or maybe we'll start with the calendar, and I will be able to talk to tell you about the fundamentals, what happened. So yesterday, maybe let's start from the calendar. So you can see a trade balance data from New Zealand dollar, which came better than expected, but it failed to lift New Zealand dollar because New Zealand dollar is still influenced by the negative outlook on GDP by the government that we saw yesterday. So New Zealand dollar is much weaker even despite this data. Apart from that, we got data from UK. GDP came in line with expectations. Other minor data came a little bit worse. But today, British pound is much stronger than yesterday. Finally, the demand showed up, and that changes a lot and actually gives a lot of hope for the buyers. But I will tell you that when we will analyze the chart from the technical point of view. In commodities, for example, we do have oil, which is influenced by the news that storm is expected in the Gulf of Mexico, which is a rich source of oil for many companies. In addition to that, we'll have an OPEC meeting and non-OPEC countries as well. This meeting will be held on the 22nd of September, so we'll look forward for this. Apart from that, we got the data for the oil market. It came in line with expectations. It showed us the stockpiles to drop, but it showed us the production to go up in the same time. The most important information is that we have a Jackson Hole symposium starting today. We will have Mario Draghi and Janet Yellen speaking tomorrow. So the most important central bankers in the world will talk tomorrow, and definitely it should influence the markets. And actually that would be it from the fundamental point of view. Unfortunately, the calendar is empty, and I was showing you that last week. I'm showing you that today we do not have tier 1 data. Just for today, for example, it's Jackson Hole symposium, which is about to start, but Mario Draghi and Janet Yellen will talk just tomorrow, not today. We do have still speculations about possible government shutdown in October because Donald Trump wants to build the wall on the border with Mexico. Instead, and he doesn't care about this government shutdown actually, or at least he's saying like that. My friends, that would be it from the fundamental point of view. So let me now switch to the charts, and this is cable. Cable is on a daily highs and bounced off this important support. The support that we were seeing yesterday. We are telling you about the support yesterday, and let me remind you. So why, in our opinion, this support was very important was the fact that it's 38.2 Fibonacci level retracement of the whole uptrend seen in 2017. because 2017 was very good for buyers, almost 1,300 pips higher, and that's a 38.2% retracement of this uptrend. Additionally, we can see that 23.6 worked, right? So we can expect that 38.2, which is usually much stronger than 23.6, that it will work as well, and it works. Actually, it works. So we got a proof of that today. In addition to that, look at this orange area. This is around psychological barrier of 128, 127.80. It was a support in July 2016. After a breakout, it became a resistance in December 2016. After a breakout, it became support in April, support in May. After a breakout, resistance in June, and after a breakout, support in July. And we had a combination of 38.2, but also from support created by those recent price movements. In addition to that, what we had is correction equality pattern. So this correction is 460 pips, as far as I remember, yes. And this one is a bit bigger, 470, 480 pips, but it's more or less the same, and it's a correction equality pattern. So that bounce did not look, it didn't look like this bounce will happen today, because the price was falling from the beginning of this week and making new lower lows, and there was no demand whatsoever here. The biggest bounce here was like 30 pips, which was nothing. But finally the price created kind of a double bottom formation, and today we have almost all positive candles here. So we do have a bullish reaction on this support on a daily candlestick. What we may get here is a bullish engulfing, and a bullish engulfing is a strong candlestick formation, especially when it happens on a daily chart. The closest resistance is this purple area here, which is 15 pips higher, and most probably we're gonna test it. Right? There are high chances that we will test this resistance. We have a next resistance here, maybe this next resistance, and once the price will break that, the next one will be here, 129.60. So far it looks good. It looks like a promising bounce. I think that many traders who are selling here are now escaping from their positions. They are taking profits, which should additionally increase the momentum. Those long-term buyers, which were buying from the beginning of the year from here, are seeing that and are buying as well on this important support. So this movement has a potential, has a strong potential to work out. I don't know, actually, on many analysis, I wrote that this data from UK caused the British pound to go lower. Actually, I do not see that. Actually, I do not see that on the chart, but okay, fair enough, if they say so. What do I see on this chart is a strong reversal, and I think that it has a big chances to be continued. Next instrument is Euro-Dollar, which also was falling in the first part of the day, but now went significantly higher. So we have a kind of retracement from the American dollar, which also can be seen on the dollar index, which I will discuss a bit later. Now let me come back to the Euro-Dollar. Here we do have two formations which are supporting each other. First one is a flag formation with those red lines, and actually, to be more precise, that's the line. Flag formation, then you have inverse head and shoulder formation, left shoulder, head and right shoulder, with the neckline being this horizontal resistance here on 118.30, And I was telling yesterday that we have a high chances to test that level again, and most probably, if not today, maybe we will do that tomorrow, because the price advancing higher, the price making higher highs and higher lows. The price is having this inverse head and shoulder formation, is outside of the flag. It all supports the bullish side of the market. So that's the situation on euro dollar. From the technical point of view, obviously, because for example, Mario Draghi can tell us tomorrow that euro is too strong and I don't like strong euro, and we will do everything to make euro weaker. Well, Mario Draghi can do that. He's the boss. So we'll see. New Zealand dollar to American dollar, that was that information about cutting the prospects about GDP. And the price broke the horizontal support here. But this breakout, at least for me, and I love confirmations, this breakout is not convincing. In the short term, it may look good. Why is that? Because if we put a line here, okay, maybe other. If we put line here, you can see that it was broken and then used as a resistance. Fair enough. But on a daily chart, what do we have on a daily chart? Is the price not closing below the support. And the next one from today is a pin bar. We can make a hammer from that. And that will not definitely be the sell signal here. For the sell signal, what we would like to see here is a price closing below the horizontal support, below this area. For now, we are fighting for a bounce of this level, so that's not actually the best place to go long, to go short. Even if we look on dollar here, on those two pairs, American dollar is much weaker. So even with the much weaker New Zealand dollar, with the weak New Zealand dollar, we can see a rise here because American dollar is also weak. So I would have problem with going here short now. I wouldn't have problem with going here short if the price would break the tail of this formation here. Next one is S&P 500. This is optimism caused by potential tax reform from Donald Trump administration. This is drop created by the wall and termination of the NAFTA deal. And now we're having a correction back again of this movement, and the price is aiming higher. Why? Just because of the fact that Americans like to buy, especially S&P 500, especially American stocks. What we are having here, maybe on H4 chart, is kind of a flag, maybe not the prettiest flag in the world. Okay, maybe like that, but it's still a flag, or maybe a wedge. It doesn't really matter. That's a trend continuation pattern. If the price will break this horizontal resistance and upper line of the wedge, we would get an inverse head and shoulder formation as well. So a formation which both formations would support the bullish wave, and in the long term making new all-time. Next one will be gold. Gold, which after the bounce from that support that we marked for you yesterday, is more or less in a sideways trend. We made new higher high, we made a higher low. I wouldn't call it an uptrend yet, but it has potential. That drop Could have been dangerous, but it was stopped. Obviously, weaker American dollar helped here. As long as we stay above the green area, the sentiment is positive, still positive, and we should aim for $1,300 per ounce. But the situation is not so clear as it could be, so there's no like a great decent buy signal here. It was yesterday, but current price action is not supporting the clear bullish view. American dollar to Canadian dollar is on a weekly lows, and at the beginning of the week we wrote an analysis for FX Street, I guess, where we wrote about our view that our view on this pair is bearish and the price should decline. And as you can see, this Monday, Tuesday, Wednesday, Thursday, we are on a weekly lows. Why is that? Because that's what the trend is. We broke the lower line of the flag. We bounced with a double top formation from 23.6. The price created head and shoulder formation, but actually we didn't break the neckline. But I'm telling you about this kind of head and shoulder formations very often, that when this neckline is declining, it's not the best formation in the world. It's the best when the line and the head and shoulder formation is goes up, not down. But it's the other thing from the technical analysis. To wrap that up, the sentiment here is positive, is negative, because that's what the trend is, and we should see the price aiming for the yellow support soon. Euro to Japanese yen, what's doing Euro to Japanese yen is breaking the upper line of the pennant. With this and a defense of this horizontal support here, we should see an upswing, right? So in my opinion, sellers failure to break that horizontal support will result in an upswing, and we made the first step for that. So the price broke the upper line of the pennant, and that should trigger a new bullish wave. There's a resistance here, so that's kind of a wedge, head and shoulder formation, but in the same time a wedge, and the price should advance to the upper line of the wedge. Next one, American dollar to Swiss franc. Sideways trend continues. I'm telling you that as long as we are above blue area and below red, there's a sideways trend and there is no clear trading signal yet. Australian dollar to American dollar, that's positive because we bounced off the uptrend line again. With a long tail, we defended the horizontal support, so that's a positive sign. That's a positive sign for this instrument, and there is a buy signal here. American dollar to Mexican peso, that was the spread from terminating the NAFTA, which actually resulted in a bearish sign, which resulted in a sign for a stronger Mexican peso, because it created a shooting star on a trend line and a horizontal resistance, and now price is getting ready for a drop, and it looks like we'll have new monthly lows at the end of the month. The price is getting ready to set new monthly lows. That's how the situation looks like on American dollar to Mexican peso. We are talking about gold now. Let's see the silver. Silver defended the $16.8 per ounce support again, proving that it's a strong support again. So if you don't have this support marked on your chart, I think you should, because it proved the efficiency one more time. as long as we stay above this horizontal support, the sentiment is definitely positive. Breakout of the support should trigger a sell signal. It will be also a breakout of this uptrend line here, but it's less likely to happen. American dollar to Japanese yen still holds above this horizontal support here. As long as we are above, there's no sell signal. Here, when we will break this horizontal support, that should trigger a sell signal on this instrument. Euro to Australian dollar, what we're having here is no trading signal here, so I won't waste your time. For this, British pound to Japanese yen as well. Here, New Zealand dollar to Japanese yen was a quite interesting one, because what do we have here is a bounce on a trend line, and we warned about that yesterday. That's a hourly chart, that after this breakout from the symmetric triangle and breakout of this horizontal support, the price went sharply down, and this downswing stopped here, and actually the price created a double bottom formation here. On H4 chart, the price created a hammer and also double bottom. So now from this we can have a strong reversal, aiming the latest resistance, and this is the latest resistance. To this we do have 60 pips. So with this kind of a price action, chances that we'll have a breakout are relatively low, but don't forget that breakout here can be an excellent long-term signal. But for breakout here, I would say that it would be nice to wait below those tails. So I wouldn't recommend you, I cannot recommend you anything, but in my opinion, that's not the best idea to enter short position here, especially that the price is performing a bounce from the long-term trend line and is creating a long tail on a daily candlestick. That looks like a bullish price action. That situation looks like the price wants to bounce. So that's not the best option to go short here. I would say that it would be better to go short once the price will make new lower lows here. And here actually there is a decent occasion for a short-term long position. American dollar to Chinese yuan is heading for this ultimate support created by the lower line of the flag and a 38-point Fibonacci level. Slowly getting there. American dollar to Polish zloty is having the sideways trend, kind of a boring one. So nothing actually happens here. I'm just waiting for a breakout. And now currently the price wants to test the lower line of this sideways trend. In case they would bounce here, that would create an inverse head and shoulder formation, and most probably it would aim for this long-term horizontal resistance here. Okay, now let me show you the dollar index. On dollar index you will be able to see what's the sentiment for the American dollar, which is negative. We went higher today. All the sentiment from the very morning seems like it's denied. Now we are still under the lower line of the flag formation, and we are creating a head and shoulder formation, left shoulder, head and right shoulder. This yellow area here will be a neckline for this formation, and a breakout of the neckline should trigger a major sell signal on the dollar index. Now WTI, that data about stockpiles, they didn't change much. Well, yesterday we had an upswing, right? But we are more or less on the same levels as we are since the middle of August. That's a pennant, that's a symmetric triangle formation, and actually the breakout of the upper line of the pennant of this symmetric triangle formation won't change much, and the breakout of the lower line won't change much as well, because I think that the game here is about those horizontal levels. So breakout of this horizontal resistance, very important one, 48.8, let's say 48.8, That should trigger a buy signal, and a breakout of this horizontal support on 47.15. That should trigger a sell signal. That's my outlook on oil. Now the sentiment is neutral and there is a sideways trend. I hate trading in a sideways trend and I try to avoid it. And so I'm sorry, but I don't have anything good for you there. DAX. DAX is breaking the upper line of the wedge, but it's not the most important resistance here. There is one much more important, which is this resistance on 12,300 points. As long as we stay below, the sentiment is neutral. It's not negative either, because we do have this horizontal support here, which got violated in the past few days, but let's see how it will work here. The price can break this dynamic resistance. As I said, it won't change much. The price closing above this red area will be a buy signal for DAX. And euro to British pound is going higher. You can see this reaction on GDP, but now British pound is slightly stronger. This upswing is very strong, and it looks like we can have a correction soon, especially that we are close to all-time highs, well, all-time, to the recent highs from October 2016. That can be an interesting place for a reversal, especially that this uptrend is getting steeper and steeper. The price is climbing higher and higher, and that potentially can trigger a sell signal here, right? Kind of paradox, but if the uptrend is too steep, it usually causes a stronger reversal. As you can see, the British pound, well, the cable is trying to defend the downswing here. Euro dollar is trying to correct the recent movements, but I think that the sentiment is already set, and those pairs should climb higher. S&P 500 should climb higher as well, and that's the sentiment on the main instruments on our platform. So thank you very much for attending daily analytical report. If you want more information about the market, you have to follow us on Twitter and visit our website alpari.news. Now we're gonna have a half an hour break, and after that we will have a webinar about trading psychology, very important part of trading. I don't even know if it's not the most important part of trading. Oh, I'm sure it is, right? And I hope you will understand that as well. So I advise you to come to this seminar about trading psychology. And on the daily analytical report, we will see each other tomorrow. Thanks very much and goodbye.